So we now move on to our second panel session, this one on funding and how 3 entrepreneurs are financing what they do. Please welcome Ed Baldry from Bird, Glyn Blaze, North Star AI and Amdaris, and Anna Sabine from Cassia.
Hello, good afternoon, and welcome. There you all are. You've sort of been deliberately chosen, sounds a bit scientific, doesn't it? But deliberately chosen because you are disparate by type of business, but also disparate by scale and type of financing plans and so on. We want to explore both from your direct experience, but also where you've seen it for other companies, how companies are funded. So what I'd like to do is to ask each of you to give the 1-minute pitch, and we'll perhaps start with you, Anna, on what you are doing, first of all, and what you're seeking to do, and where funding will play a part in that. Anna, you start, and then we'll have Ed and then Glyn. Thanks.
Okay, thanks Greg for having me. So Cassia is a new concept. It's a blended co-working cafe. Our first one is based on Bath Riverside. So it's very much an adult space. You can drop in and use a desk for work during the day, or you can hire a desk more formally. And then we have a big events program. Where funding comes into that is that obviously we need funding in terms of setting them up. They have quite a big upfront cost, both in terms of kind of building works and assets and other things, kind of working capital. And that's been a real experience for me because I came from a very different background and I hadn't been to that world before. So we're looking at doing a second Cassia. I should make my quick pitch. We would love to talk to anyone that wants to fund a second one. Thank you.
So hang on a second. You've started Cassia in the pandemic in an area you were directly less aware or less experienced in, but have done very well with, and you're looking at another one already. That's the position? Yes,
because I appear to lack a normal human thing around risk. I just seem to have that bit switched off in my brain. So yeah, and we're going to open another one as we go into the next lockdown. We're very excited.
Well, risk is one of those 4-letter words ending in K that entrepreneurs seize on, including luck, and nothing else smutty or dirty otherwise. Ed, tell us about you, what you're doing, where funding comes in.
Cool. So thanks for having me. I run a company called Bird, which is a coaching platform for runners using lots of fancy AI. We've just gone through our pre-seed raise on Seedrs. So we closed about 2 weeks ago, and we raised just over £266,000, which was useful because it allows us to launch later this year. It was a great experience, though, actually. We had 200 people, just over 200 people invest in us, and it was really rewarding understanding that there was a crowd that was wanting to build the product with us. So we've gained an awful lot of expertise and specialists that we wouldn't have otherwise been able to reach without having taken the leap of faith and going down the equity crowdfunding route.
Right. We'll come back to that very point about crowdfunding and compare it with other routes of financing and so on. But thank you. Glyn, your experience is quite different, and we'd just like to hear your story from where you were and what you're doing now and the company you've joined and what access to financing they have and what might be happening with it.
Yeah, so 5 years ago, I started as a founder of North Star Innovation Group, which was a technology platform, basically taking data analytics and HR performance appraisals and fusing those together to sort of align them with business goals. That business sold to the Access Group in March of this year. Now I'm part of the A team at Amdaris, which is a Bristol scale-up. So they're a technology and software solutions business who have been invested in by BGF in 2020. And they're on quite a significant scale-up journey over the next 3 to 4 years. So it's quite exciting times.
Quite exciting times indeed. We'll again come back to the detail on that. So I'd like to come back to Ed and to talk through the Seedrs route, the backstory about, certainly, first of all, why you chose that structure and specifically why you chose Seedrs and how the reality compared with your plans and stroke hopes.
Those are all very good questions.
Thanks.
I will admit that I was quite hesitant about the crowdfunding route. The rest of the team were very keen on it. I thought it had strong risk of us falling flat on our face in a very public way. The thing that convinced me that it was useful, though, was this idea that we could, so we're obviously a pre-revenue company currently, and the public nature of crowdfunding meant that we could show to a certain extent the product market fit of just the fact that 200 investors care about what it is that we're doing, which is currently our biggest risk factor of, does anybody care about the company we're trying to build? The rationale for Seeders over other platforms, really the only other game in town is Crowdcube. We just happen to, it's one of those things where you have phone calls with people and there's no really rational reason as to why you pick one over the other. We liked the people at Seeders ever so slightly more, and it seemed like a more straightforward process to go with. In terms of reality against expectations, it went substantially better than we expected. Certainly in the very first days, we were furiously ripping up various marketing plans in the first couple of days because we had expected to kind of get to 100%, in a week or so, and then within a few hours we'd already got to 100% mark. So there was lots of content that it's a good problem to have, that you're getting rid of content that you no longer need. There was definitely a lull in the middle of the campaign. If anyone is planning crowdfunding, plan for the lull in the middle. Either don't panic or work out a really good strategy to have somebody in the wings to kind of, push you on or find some interesting news to move you forwards. We made the classic mistake of the raise went really well to begin with, and then half term and the bank holiday hit. So everyone just went on holidays. So we sort of lost momentum naturally just because no one was really in front of a computer.
And I suppose it's inevitable. It's the sort of thing you typically only do once. I know we do have many serial entrepreneurs as well, but this is your first experience, but you didn't really know what to expect, I guess.
No, that's true. Though actually, one of the things that being a first-time founder, I've always tried to take on as much advice from other people as is humanly possible. So we're part of the incubator Set Squared in Bristol, and we also work with a company called ISQ, who advise startups on the journey of crowdfunding. And I think both of them were invaluable in us understanding what to expect, what we should do to prepare, how we could best present what it was that we were doing. I think without that external support, we would have probably fallen flat on our face in a very public way. So we're glad to have them advising us.
Generous of you to give them a shout out. And if our team have got the detail, we'll put that out on our social media channels as well as on EntreConf site itself. We can all do with advice, whatever sort. I'll come back to you in a bit about how you're going to allocate the funds. But Glyn, to come to you, so you're scaling up, you've got this opportunity to scale up with material access to funds. I think the figure is something around £100 million of a line of funding. First of all, is that true?
No.
But secondly, all right, tell us about it, but tell us what you are doing and what the next 2, 3, 5 years might look like if it all goes to plan.
Yeah, so BGF invested in Amdaris. So there is the initial investment, which is the 6 million, which BGF invested, but also you've got access to funds. Now, Amdaris have got or we as an organisation got very ambitious plans in terms of our growth, and our growth is to 100 million, hopefully 100 million over the next three and a bit years. What's been really key about that is that Vlad and Andy, who are the co-CEOs of Amdaris, the company's been going for about 12 years, and they've been sort of quietly ambitious. And then it's like they've gone through a number of gears in recent years and gone, right, okay, we're really going to go for this. So they've kind of really focused on putting together what they would call their A-team, which is saying, right, okay, can we get best of breed in all of the positions that we need to help us grow? Can we bring in investment from an investment vehicle that actually works? And I know that as they went through the process, there was that kind of looking in the whites of the investors' eyes and saying, are you those who we could work with and we can see going along with us on the journey? And I think with BGF, they've made an incredibly good decision, because along the route, I've sort of obviously been invested in and met investors. And sometimes when you look in their eyes later on in the game, you're like, oh, what have we done? But it seems so far that BGF are actually, they're human. They're really, really human. And they actually care for the individuals, as well as having the money. They have the expertise to make the introductions, to help us accelerate our business in terms of the sales contacts that they've provided us with. And I think with all of that, everyone feels like they're on a really good journey together. It feels exciting, and it feels like we're all, like when we're watching the football and you're thinking we've got like a real good team, we've got a chance of getting through to the finals of the Euros. I think that's the feeling that we've got at Amdaris at the moment, is that when you look at the person next to you playing striker or in defence, you're like, yeah, that person's really good.
Glyn, take a leaf out of Anne's book. We're not thinking about getting through to the final of the Euros. We're going to bloody win it, mate. I mean, really.
Absolutely. Sorry, my bad.
No. And it is absolutely true. We've heard it from others. We know other companies have been funded through BGF, British Growth Fund, that they do have that strongly advisory point, which absolutely comes back to a point that Burgess Salmon were making earlier about the alignment when it comes to term sheets and so on, the mutuality of funders and owners and entrepreneurs. Other investment sources are, of course, available, but it'll be really interesting to see how that plays out for you. We will hear your story, I'm sure. We'll hear it loud and clear. We'll certainly enjoy telling it through Bristol Life. So, Anna, talk about, you mentioned it in passing, this thing about, eyeing more already. Talk through your funding plans, stroke funding options. First of all, to the extent you could be candid about it, roughly, how much might it take and where might you find it?
Well, I'm happy to be really candid, but where Glyn and Ed have sounded very proficient and professional, I'm going to sound like the one crashing around, wondering how you finance businesses. So I rather naively, as someone that I think had watched a lot of Michael J. Fox movies as a child, thought that I would come up with this business and take it to very kind of attractive grey-haired bank manager in an office building, and he'd go, "Oh my God, that's a great business idea. Do you want £200,000?" And I'd go, "Yes, please." And off we go. And it turns out that's not really how you fund businesses these days. And as I mentioned earlier, coming from a consultancy background, consultancies are pretty easy to set up, right? You get a laptop, you sit on your kitchen table, off you go. It's not too complicated. So a new Cassia for us takes about £150,000 to £200,000 to set up, roughly. And some of that's assets and some of that's working capital. And to be really frank, the main way we funded the first Cassia was I sold my buy-to-let, right? So that's my pension gone. And the whole experience of that has made me very aware that if you do not have a buy-to-let down the back of a sofa, or you do not have very wealthy parents, or you do not have a lot of contacts in your existing industry who are going to chuck tens of thousands at you, it can actually be incredibly difficult to set up something, even if it's a really good idea. And I think there's a really interesting thing around how we talk about entrepreneurs, and we make it almost sound a bit magical. Money just comes magically. You know, you're Dale Vince and you're in a field one day and the next day you're this massive millionaire in Ecotricity. And well, where did the money come from? So there's a bit of that going on. So in terms of Cassia 2, I'm getting a bit more savvy. I've talked to everyone I can, picking up on Ed's point. I've spoken to everyone and asked everyone if they know anyone, and I've been put in touch with various people who do fund businesses, and I've also been approached by people on LinkedIn, and I've got a bit more savvy at working my contacts. But I still suspect I personally will be funding a lot of Cassia 2. When we get to Cassia's 3, 4, 5, I'm going to have run out of money, so we will need to get even more savvy. But it's a really interesting journey how you fund something that's an actual physical thing that you have to put tables and chairs in and be open on day one, and it's slightly terrifying, particularly given clearly the kind of wider context at the moment. But if anyone on here has any great ways of funding those businesses, please do message me afterwards, because I'm all ears at this point.
You say it's slightly terrifying as a line that Anne Hyatt quoted earlier about being uncomfortably excited. You definitely appear to be excited, and you've been quite candid about, to some extent, being uncomfortable. For the avoidance of doubt.
I'm very uncomfortable, definitely. And I wrote that down, actually, when she said that. I was like, that's
Good.
very where I'm
likewise. Me likewise. For the avoidance of doubt, in case Dale is watching, I'm not so sure that he is some massive millionaire, but he has certainly generated, if that's the word, an extraordinary level of activity. And I'd also say, for those interested in such things with Cassia, it's the nature of your business is very public. It's a co-working space, it's a cafe, it's very zeitgeisty in that respect. I don't doubt that some happenstance of an entrepreneur seeing what you're doing, you never know, there may be someone out there, there may be someone watching today. For all of you, good luck with that.
Just very quickly, Greg, that kind of picks up nicely on Ed's point, because one of the things for him is he gets the chance to have all those investments and that input, and then he can launch it. Whereas every mistake we make is visible, and every potential investor who comes in and has a not great cup of coffee is immediately not an investor. So it's incredibly uncomfortable from that point of view as well, trying to sell your product to people while it's live, if you see what I mean.
Which is why the flight to quality matters in all businesses, but perhaps more those which are live, active and open, such as yours. Yeah. I want to come back to Ed, if we could bring you forward. I want to talk about this, and I have to query the detail here just to check it's right. The funds invested, you've got some great figures. It's 40% of the money invested will go in product, 20% in customer acquisition, 23% in marketing, and 17% in customer experience. Did you back do that so it totaled 100%, or is that exactly allocated, and do you know precisely what you're doing to the nth degree?
I would say somewhere in the middle. We have many models, many ideas, many plans of what it is that we will be spending the money on, but I have learned over the past 18 months that quite often when reality arrives, the best laid plans can go, in different directions. So the thing that we are focusing very heavily on right now is recruitment. So we're clear that the next year, the success or failure of the company will be on the people who are working in the company. So we've just hired a junior designer who we're super excited is coming on board in about a week's time. We're currently advertising for a junior developer. So if anyone's interested in keeping people running, listening to this, and is either a junior developer or knows a junior developer, send them in my direction.
Very good, very good.
And we'll be looking for a marketing manager in the coming weeks as well. So that's where the bulk of the raise is going. It's going on salaries. The exact verticals in which those salaries sit made up the kind of the percentage breakdown that we had on the Seedrs page. We have saved to one side some marketing budget, but again, we're very much about being humans and talking to other humans, and we think that's the most effective way in this early stage of growth to get people to be using the product.
Yeah, okay. Let's ask you a little bit more about that Seedrs or crowdfunding route for those who are not so familiar with it. Those people who put in that money, what do they get for it and when do they get it?
Mm-hmm. So they've invested money for equity, so they own a piece of the company. So Seedrs have a process called the Seedrs nominee. So rather than them being directly on our cap table for the company, Seedrs is nominated on their behalf. So they own a piece of it, but it's not like we have to deal with 200 people sitting there and issuing share certificates and all the rest for them. But very much we see them as being part of the company, and we have a forum and all the rest of it with them. In terms of what do they get for the money, when we are successful and either we exit or there's some sort of merger or whatever the future might hold, they'll see a return on that investment. The nice thing about Seedrs, I guess, for people with shorter term outlooks or maybe lower appetite for risk, is that there's a thing called the secondary market there, whereby you can sell on your equity in early stage startups to other people who are interested in it, which is reasonably rare. Normally, if you buy a piece of a company, you're holding that until it is that you exit from it. So that was certainly something that appealed to some of the people that were investing.
Okay, thank you. If you stay on, I'm going to ask you this question on behalf of Sophie Rochester, and by all means the others join if there's observations. Sophie's asked us, or suggested, we should love to hear the panel's thoughts on the messy middle for funding. Their particular business, we're post the Seedrs, SEIS, EIS investment rounds, but they're not at the £1 million rev, so out of BGF, similar ranges and so on. So she feels this is the hardest part of the journey. What's your advice for someone in that sort of stage of funding, beyond crowdsourcing but pre-major investments?
I think
you're not at that level, I know that, but yeah.
Yeah, exactly. I'm currently there, so if anyone can advise me, I'd welcome it. From our perspective, the strategy that we're taking is very much to focus all of our attention and all of our energies right now into making the product and the product experience as good as it humanly can be, and not worry about the next round of funding, which is easier said than done. There's always the fear that we're going to have to pack up shop in the not distant future. But we understand that we have a very talented team working on the product, that we have a good idea for the product, and that if we can execute on the product, that we can get beyond that chasm, that funding chasm, to the next step. So I guess in running, you always talk about, don't think about the end of the marathon, think about the next kilometer. And so we're very much trying to take that approach to business, that we're not worrying about where we're going to be in a couple of hours' time. We're worrying about where we're going to be in a few minutes' time. And making sure that's as good as we can make it.
Very good. Let's bring in, go on, Glyn, yeah?
I was just going to say, I could just throw in something anecdotally, because I think when we were at North Star, we ended up in this no man's land, so to speak, in that period. And if there's anything anecdotally that I would have changed, was that when we set out, we didn't go as aggressively on sales and marketing as we could have done. And knowing what I know now, if we'd been able to go back to our investor with, we'd focus more finance on the sales and marketing, and we're able to show him how we would give him a greater return because of how we'd invested initially in that middle part, I think he would have then come back to the table a lot quicker and with a lot more ease than it was when we were in that sort of no man's land. And it's kind of that thing, isn't it? Hindsight is 20/20, but we realised that the investor really wants to know, if I put more money in now, how am I going to make sure that I get the return that I'm looking for? And it's basically thinking about that ahead of time. How can you demonstrate that you're able to do that? And Ed, just quickly, I've seen my company secretary just sent me a message. We provide developers, so we should have a chat.
Just
That's
lovely.
good. Let's catch up after this.
Please do. Obviously, when it's over, because there's quite a bit more to come, but please do. There's many opportunities. If I just come back to you, Glyn, actually, for you to take this and perhaps the other two join, what key tips would you give to startups and scale-ups about funding sources and funding rounds? You've touched on one, which is essentially be bold, have belief, or whatever. What else?
I'm like a bit of an energizer bunny, and I love people who. So I'm very much come from the sales background, share the vision, share the ideas, get everyone on board. Now the issue with that is that often the investor on the other side, who's very much, I love your idea, I want to run with it, you end up getting into bed with. But I think you find out along the way that there is such a thing as dumb money, and I think money and investment is one thing. Having expertise, the ability to tap into a network, the ability to be able to have others get involved in your business who are going to accelerate your business is actually often far more beneficial than just plain money. So later on, I ended up in Set Squared as well later on, because I realized that we had money, we had the investment, but I needed people who'd gone on the journey before. I needed people whose networks we could who we could tap into. And from a technology perspective, I also needed people who could help us. We had a great technology team, but help us like challenge the technology that we were using for the future. So that's one of the things. And just, I think often listen to the stories of the companies that those individuals or those businesses have invested in previously. Like, not all PE is bad, and not all VC is bad, and not all angel is bad, but not all of them are good. And I think, we take references when we're hiring people, but sometimes we're so excited about our projects and getting funding for our projects that we sometimes may throw caution to the wind and accept money from someone who perhaps we may not be aligned with in terms of our own moral standpoint.
Thank you. We've had a question from Chris Southam. He says, I'm a solo founder. I find the idea of finding investment a huge hurdle. He's being very candid. I'm sure you speak for many. Something like Seeders seems the right approach. Did you take legal advice before starting that process, or dive straight in? Specifically to you, Ed, but then if the other two, if you could come in about where you've sought advice, legal advice particularly. Name the company if you wish, but the process of getting that advice. Ed?
We took a very small amount of legal advice before jumping in. In terms of working with Seeders, we happened to be going through, we're a B Corp pending company, and so we happened to be going through the process for that at the same time, and it was sort of an add-on to check through the terms and conditions that we were taking on with Seeders. But I think at this point, equity crowdfunding has been going for so long that there are not that many dragons left in it. I say very innocently. I hope that is true, because otherwise I'm going to get eaten, because that might be a very naive standpoint that I've just expressed. I mean, I would agree though with the general sentiment of the comment. I mean, finding funding is terrifying. It's incredibly difficult. And unlike Anna, I wish I'd had a buy-to-let property. So I again, slightly naively had saved up some cash in my work, and had been doing that, and some of the other people that founded the company did the same. And of course, we ran out pretty quickly, and so there's it's a very steep cliff to climb very on in the company. When you're trying to focus on product and build the company that you want to exist in 5 years' time, 10 years' time, kind of thing. So I can sympathise with the fear.
Can I come in on that, Greg? Is there
Please
time?
do, Anna. Yeah.
Well, I was just thinking it's kind of a mashup of the answer to this and the previous question. I mean, I think someone was talking to me the other day about recognising when you're working in your company and working on your company. And I think there's a tendency when you're a startup that you're so frantically in it, you don't look up. And actually, it's okay to spend an awful lot of your time chatting to people and going to meet people for coffee and going to have a drink and listening to people and learning. And then the more you do that stuff, the more stuff will happen. It won't necessarily be directly related, but the more conversations you can have, the more research you can do, the better. So all I would say is just give yourself a bit of a break and let yourself have that time and space to think about it rather than just being petrified by it. You know, give yourself some time to think about it and to just link in with this, you know, bloody LinkedIn, no one likes it, right? But, you know, you can find useful people on LinkedIn, write about your business, write about your vision. People will kind of be drawn to it, but you have to just get out there and hustle for it a bit and give yourself the time to do that.
Maybe give yourself the time to do that by having a coffee at Cassia. Who knew?
We're very happy to serve you coffee while you do it.
I'm sure so. And it also very much chimes with what Professor Dimo Dimov was saying about make sure you have the time to think. Thinking is working. Glyn, your thoughts about taking advice, specifically legal or other forms of advice, that you look back on your career and others you've known as entrepreneurs?
Yeah, I wish I was so excited about building the plane whilst flying it. I kind of wish that I'd taken advice right at the beginning. However, one of the great things about being at Set Squared was that when we were looking at what to do next and how to go, we were able to tap into their network, and then you get introduced to people who would consider funding you, and you're sort of pitching to those people. So often it's a great way of like a gentle route, because it is quite nerve-wracking, because everything lands and falls with you when you're doing your own enterprise. But I think that if you can get involved with a network and that's one of the key things with these networks, is they provide you with the opportunities and the people to meet where you can get used to pitching your project, get used to talking about what investment you're going for, and get used to the things that people are asking for. So what I was terrible about at the beginning was know my numbers. I would just sell things, sell what we had without knowing the numbers to like an intricate detail. And then you get a really savvy investor and he could pull that apart really quickly. But it's like, as you start to learn and you start to do it, you're like, right, okay, I know that I need to know this. Oh, they'll be also looking for this. Oh, this is the type of person that they want to invest in. And slowly, as you start to build up those coffees at Cassia, you start to do, it starts to become something which you feel comfortable with, and you can make the thing fly in formation.
Brilliant. There's a lot of energy, passion, optimism, positivity, and openness from each of our three panelists. Thank you to each of Anna, Glyn, and to Ed. Good luck to you all, and come tell us at EntreConf 22 how it all went. Good luck to you, and thank you.
You.
Thanks.
Thanks,
Thank
guys.
you.
Thanks.
Thanks a lot.